when you think about the financial markets, what comes to mind? Probably a lot of numbers, right? Charts, data, algorithms, all that stuff. But what if I told you that one of the biggest factors driving your success isn't on a screen, but inside your own head? Okay, let's get into it. So, here's our game plan. First, we'll talk about why it's more than just numbers. Then, we'll dive into your brain's built-in financial biases. We'll look at why those standard personality tests you see everywhere just don't cut it for investing. Then, we'll introduce a really cool idea, a market-specific personality map. And finally, we'll tie it all together and see how your strategy can meet your temperament. So this really brings us to the core question, the big one for this entire explainer. In the high-stakes world of investing, what really moves the needle? Is it all about having the best data and the smartest models? Or is there something deeply personal at play? All right, let's start by digging into this idea that the markets are about way more than just data. There's this hidden variable, you could say, that's quietly shaping every single decision you make with your money.
Think about it like this. We never have all the information in the market, right? It's a world of uncertainty. So you get two very smart, very skilled investors. Give them the exact same piece of data, and one buys while the other sells. How is that possible? Well, the difference isn't the data, it's their temperament. It's their personal tolerance for risk, their emotional knee-jerk reactions. Their personality is the filter for everything they see. And that brings us to the psychological traps, the little gremlins that are hardwired into all of our brains. I'm talking about behavioral biases. These things can sneak up and totally wreck even the most carefully thought-out investment plan. It is absolutely fascinating when you see this in action. Picture a really volatile day in the market. Trader A, who just loves the thrill, sees all that chaos as a huge opportunity and doubles down. But Trader B, who is naturally cautious, sees the exact same chaos and immediately starts selling to reduce their risk. It's the same signal, folks, but two totally opposite reactions driven purely by who they are as people. And these reactions, they're often powered by some classic biases. You've got loss aversion, where a $1,000 loss hurts way more than a $1,000 gain feels good. There's overconfidence, which gets us to take on insane amounts of risk. Confirmation bias, where we only read the news that confirms what we already believe. And anchoring, where we get stuck on a price from last year and just can't let it go. Sound familiar?
And here's the real kicker. Your personality doesn't just sit next to these biases, it's like an amplifier, cranking them up to 11. So if you're already a pretty anxious person, that loss aversion bias can feel absolutely paralyzing. It's what makes you panic sell at the exact bottom of the market. Your unique psychological wiring determines which of these biases is going to be your personal kryptonite.
So you might be thinking, okay, I get it, I need to know my personality, I'll just go take one of those online tests, problem solved. Well, not so fast. It turns out that using a general tool for a super specific job, like investing, it can actually be kind of misleading.
Look, standard psychometric tests, like the famous Big Five, are amazing tools. They're scientifically solid, they're validated, and they give us a really good picture of our core personality, how open or conscientious or extroverted we are. They're fantastic for things like general career advice. But here is the problem. There's no context for the market. Knowing you score high on openness is nice, I guess, but what does that actually mean for your portfolio? Does that make you a great long-term value investor or a terrible day trader? The test has no idea. It's like having a map of the entire globe when what you really need is a street map of one tiny neighborhood. This is where we need something different. We need a specialized approach, a solution that was built from the ground up to connect our general psychology to the very specific, high-pressure world of finance. And so, this has led to tools like what's called the Investor Personality Index, or IPI. Now, an assessment like this starts with the same solid science as the Big Five, and this is the total game changer. It takes your results and runs them through a filter, an interpretation framework that is designed only for trading and investing. So what do you actually get out of this? It's not just some label. Yeah, you get your full personality profile, but then you get a deep analysis of how those traits are probably going to make you react during a market crash or a bubble. It gives you real, concrete recommendations for strategies that fit you. It can even point you toward careers in finance where your personality would be a huge asset. And this brings us to the payoff. This is where it all comes together. Once you have this specialized map of your own mind, you can start to do something incredibly powerful. You can finally align your strategy with your temperament. So what does this alignment actually look like? Well, take someone who is high in sensation seeking and has very low patience. That person is going to be miserable and probably lose a lot of money trying to be a buy and hold investor. But those exact same traits, they're practically a superpower for high frequency momentum trading. On the flip side, someone who is super conscientious and methodical might be an amazing fundamental analyst, but they'd get eaten alive in a fast paced trading pit. And listen, this is so important. The goal is not to change your personality. You can't. You are who you are. The goal is to stop fighting a war against your own nature. When you align your strategy with your natural tendencies, you just reduce the friction. It makes being disciplined so much easier, and that is what leads to better performance. Honestly, the best way to think about this is like elite sports psychology. Nobody bats an eye when a pro athlete works with a mental coach to get their head in the game for peak performance. Well, this is the exact same thing. It's the financial equivalent. It's about training your mind for the competitive arena of the markets. And just so you know, this isn't some fluffy, feel-good idea. It's a systematic approach. As the source material puts it, our tendencies, our behaviors, they aren't just random. They follow patterns. They can be understood, they can be measured, and most importantly, they can be managed for our own benefit. So I'll leave you with this final thought. In a market where trading algorithms get faster every millisecond and information is everywhere instantly, what's the one edge you can have that no one can ever copy or take away from you? Maybe it's not a secret formula. Maybe it's the deep, honest understanding of the most complex piece of the puzzle, yourself.